Obviously, the approval of the US Bitcoin ETFs has been amazing. It's the best-selling product, I think, in BlackRock, Fidelity, like the whole asset manager space for ETFs in their history. So they're loving the fees, all the AUM inflows. And obviously, we're seeing on a daily basis a few $100 million of new fiat being pumped into the crypto ecosystem, which is obviously led for the prices to rise. So I think that's probably the big macro trend. Obviously, you have the halving. Everyone likes to look at the past cycles and divine how it's going to be exactly the same, but obviously every cycle is different. This is the main narrative of this cycle is sort of the addition of a Bitcoin derivative that institutional investors globally can invest in. And so we're really tied to those flows in terms of how the price action is going to eventuate. And I think having sort of takes a second step to that, and maybe it'll be a lot more pronounced in terms of its impact 3, 6, 9 months down the road. But I would say that we're primarily focused on what are those daily flows out of the US. Obviously, Hong Kong has approved its own spot Bitcoin ETFs, and those should be launched sometime soon. So in Europe, UK, everyone's trying to get out on this fee game in terms of a TradFi asset manager. So I think that's the trend, having a sort of second fiddle this cycle. We're in a great time. It's time to, strap it on, go long, forget about it for a while. Don't get too intellectual about things. All the alts are going to rally. The question for an investor is picking the one that resonates with you the most, being concentrated in your bets so that you're making the most amount of money given this particular point in time that you can.
Bitcoin's latest halving event has triggered a seismic shift in the cryptocurrency landscape. With this historic occurrence now behind us, the crypto market has officially entered a new phase. Traditionally, the period following a Bitcoin halving is marked by exhilarating price surges, but it's crucial to exercise caution as these euphoric highs are often followed by significant price corrections. In his recent interview, renowned crypto tycoon Arthur Hayes shared his insights on the post-halving crypto cycle. Hayes anticipates unprecedented highs for Bitcoin and other altcoins during this phase, especially with the advent of spot Bitcoin ETFs fueling market demand. While he maintains an optimistic outlook, Hayes doesn't shy away from acknowledging the inevitable market corrections that lie ahead, cautioning investors not to overlook historical trends. Despite the impending corrections, Hayes remains bullish on the overall trajectory of the crypto market. He points to a growing trend of traditional finance investors flocking to crypto amid the gradual collapse of the bond market. As the crypto sphere continues to attract mainstream attention, Hayes advises viewers on navigating the volatile crypto market landscape in his closing remarks. Stay tuned to the end of the video for Hayes' expert guidance on navigating the crypto bull market.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Obviously, Solana's the hot kid on the block this cycle, and we're seeing that their TPS numbers are completely bullshit, which is fine. I mean, that's just a function of them being successful at attracting a meme coin degenerate trading crowd, and they want to all trade on Solana. Does that mean that Solana is going to flip ETH in terms of market cap? I don't think so. But again, as you said, as Bitcoin price rises, everybody feels wealthier, and they get into all these sort of, different sorts of alts. Obviously, I've been pushing this narrative like AI coins. I've been, a big Filecoin believer, but there's other ones out there as well, like Tau and BitTensor has done very, very well. You've got, I think, IO.net as a big airdrop or launch that people are like FOMOing about. So there's all these different sort of narratives, and then you have all the different new L1, L2s that are launching this cycle. So all the alts are going to rally. The question for an investor is picking the one that resonates with you the most, being concentrated in your bets so that you're making the most amount of money given this particular point in time that you can, because obviously most of these things are completely dog shit and bullshit, and they're not going to live up to what they said they're going to do on their nice looking pitch deck. And so you want to be well clear of this shit when the market starts sort of rolling over, when people start asking the question, oh, well, let me see all those users. Let me actually measure the TPS versus what you told me about, 2 years ago when I invested in this thing. How many AIs have actually used in this? Of how much data have you actually put on the chain versus what I thought 2 years ago? So when you start asking those questions, you want to be well clear of most of this shit. Even the good stuff is going to get smoked. We're in a great time. It's time to, strap it on, go long, forget about it for a while. Don't get too intellectual about things. We'll see. Who knows? It's got to be fun. It's going to be fun. It's got to be degen. Like, it's not fuck professional, all that like bullshit. Like, if it's not fun, if you're not doing it because you don't care if you lose all your money, but but it's how you're having fun, then it's not going to drive any sort of attention. Because Bitcoin has a very good value prop. Bitcoin is crypto money. It's the hardest money in crypto. And so I know people are like, oh no, Bitcoin doesn't do anything. That's the fucking point. And so the conservative nature of Bitcoin is its biggest asset. So I'm not really that fussed that, okay, maybe, meme coins can or can't come to Bitcoin, or DeFi can or cannot come to Bitcoin, or whatever. As long as we keep being the best money that's ever been created, then we're doing our job. I think you don't want to invest in anything that's like an application on top of some sort of like open source model. Like you want to invest in sort of a AI infrastructure, whether that's compute power, storage, chips. And so all the really successful narratives in crypto are like, oh, we're going to create a decentralized network of people providing compute power, or we're going to create a decentralized network of people data storage for AI. That's the sort of stuff you want to get involved in, because then they don't have to pick a winner. It's like, how many startups is OpenAI or Anthropic going to put out of business because they just decide to do that same service themselves in-house? And we're already seeing that with, a lot of VC Silicon Valley startups just being zeros immediately once OpenAI decides, okay, we'd like to do that too. Cool. We have better distribution, we have the model, and we can completely disintermediate you. So I think you want to, as I like to say, focus on the AI food groups, compute power, and storage, any sort of coins related around that. It's very easy to build a very convincing narrative around those. Again, all the alts are going to rally. The question for an investor is picking the one that resonates with you the most, being concentrated in your bets so that you're making the most amount of money given this particular point in time that you can. We're in a great time. It's time to, strap it on, go long, forget about it for a while. Don't get true intellectual about things. There's no such thing as like a permanent plateau, right? I'm not fucking Irving Fisher in 1929 thinking that stocks are never going to go down, right? That's just dumb. Stuff goes up and down. We're humans. We overpromise the future and it gets there and it's kind of like blah, 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 right? So I think maybe the cycle is just longer and the upside is just higher, but there will be an 85-90% drawdown in crypto. I am very confident in that. Sell the news. But again, you could be wrong. Most people are already invested. So it's not as if it's like, let's go short Bitcoin. It's, hey, I'm going to hold off and maybe I'll allocate more a week, 2 weeks, a few months after the halving. I think that's probably just going to be very boring. And we're entering the summer, we have vacation. So I think we're entering that low volatility, boring period, and sort of the halving sort of just starts that period. Obviously, the approval of the US Bitcoin ETFs has been amazing. It's the best selling product, I think, in BlackRock, Fidelity, like the whole asset manager space for ETFs in their history. So they're loving the fees, all the AUM inflows. And obviously we're seeing on a daily basis a few $100 million of new fiat being pumped into the crypto ecosystem, which has obviously led for the prices to rise. So I think that's probably the big macro trend. Obviously you have the halving. Everyone likes to look at the past cycles and divine how it's going to be exactly the same, but obviously every cycle is different. This is the main narrative of this cycle is sort of the addition of a Bitcoin derivative that institutional investors globally can invest in. And so we're really tied to those flows in terms of how the price action is going to eventuate. And I think having sort of takes a second step to that, and maybe it'll be a lot more pronounced in terms of its impact 3, 6, 9 months down the road. But I would say that we're primarily focused on what are those daily flows out of the US. Obviously, Hong Kong has approved its own spot Bitcoin ETFs, and those should be launched sometime soon. So in Europe, UK, everyone's trying to get out on this fee game in terms of a TradFi asset manager. So I think that's the trend, having a sort of second fiddle this cycle. I think that we might be in a more elongated cycle because we're crescendoing into a collapse of the sovereign bond market, or a belief that there's something better to own than a treasury, a bond, a JGB, or whatever. Just look at why are institutional investors investing in Bitcoin? Because there's a whole narrative about the destruction of the sovereign bond market, which started basically as the Fed started raising rates in March of 2022. So there's a reason why people are allocating to Bitcoin, not just that Bitcoin exists, and so therefore I will allocate however many billions have gone into these products. There's an actual underlying issue with the markets that's propelling this. So if you take away the Bitcoin and it was still pending, I think we wouldn't be at an all-time time, maybe at 50,000 or 45,000, whatever it is, but we've rallied off of 16,000 after the FTX collapse, and that's all predicated on a lot of money printing from the Fed, the BOJ, ECB, PBOC, all the major culprits in this fiat debasement orgy that's going on globally. And now institutional investors have a way to say, okay, I'm not just going to sell my bonds. Now I have something else to invest in that's not GLD. And that's why you have all these inflows. It's not just that Bitcoin's here and therefore I will allocate. There's an underlying economic tension there. Come out pretty strongly saying that taken to the extreme, that passive investing, and we've seen this in traditional equity markets, is toxic to price discovery. And so we'll see how large these asset managers get in terms of the percentage holding of Bitcoin and maybe some other cryptos and shitcoins as well, and whether their passivity and their non-engagement with the actual underlying protocols and what we're here to do, which is, create a whole new financial system, does that detract from achieving that goal or not? So I think the jury is still out. I don't know what percentage of the network, so total supply that BlackRock and Co. owns, well, at 1% or something like that. We're well far away from any sort of like doomsday scenario, but it's definitely there. We might not adhere to this 4-year cycle because I think we're in the moment where the global investor class and proletariat loses faith in this thing called Keynesian economics and deficit financing. And so if we have a revolt of the bond market saying, fuck, I don't want to own JGBs, treasuries, bunds, all these bonds of these bankrupt governments, and here's this digital alternative, we could see a very explosive upside cycle. And then maybe if we throw all the baby boomers out of power around the world, the younger generation is like, well, why am I paying for healthcare for a bunch of Muppets? Let's reorganize the system, and then we might see some more responsible governance in terms of spending. And then at that point, maybe a government bond is a better bet than owning on Bitcoin on a forward-looking basis. So I think things can change. We obviously think that the same crop of idiots who run the world are going to continue doing so, and the same sort of deficit financing policies are going to prevail for the foreseeable future, but that's not going to be the case. In 5 years' time, things are different. So I think that would be my caveat to the super cycle. And I hope the more people who say super cycle, the more I'll be ready to start dumping bags. The Fed and the Treasury, at least in the U.S. perspective, are net stimulative. And because the stock of U.S. debt is so high, and all these other Fed programs that they have, reverse repos, interest on excess reserves, taken together, they've been stimulative for a while. Because as they raise rates, they pay more interest out to banks and wealthy individuals who spend that money into the economy, right? And so I think the focus on whether it's 2 or 3 rate cuts or maybe it's 0 is is irrelevant, because the Fed and the Treasury are already printing money. The more they raise rates, if they do that, they print money. They cut rates, juice the markets, essentially it's stimulative as well. And so it doesn't really matter what they do unless the US is going to declare some debt jubilee and just extinguish all the debt. The net effect is stimulative. There's more liquidity in the system. And so I think parsing, Powell's statements on data dependent and, 1/10 of CPI here and another 10th of CPI there is fucking mind-bendingly boring and dumb, because it doesn't matter. Like, Bitcoin's going to go up whether the Fed cuts 2 or 3 times, if they even cut at all. There's some people who are saying that they're going to reduce the pace of quantitative tightening by, $30 billion per month or something around that, and they'll announce it at the May meeting. Again, at the end of the day, they have so many ways to print money that isn't the quantitative easing that everyone understands from 2008 that it doesn't really matter. Ultimately, it doesn't matter who wins the election. Like, they're going to print money to hand it out to whoever their constituents are. Trump wants to do tax cuts, Biden has green energy or whatever, right? So it doesn't really matter. It's a fun little circus that everyone gets to watch about 2 old dudes fighting it out in the media, but other than that, it's irrelevant. I think that if they were going to ban it, but they've done it already, my base case is look at China. In China, Bitcoin is not illegal. It's not illegal to hold Bitcoin. It's illegal to do a lot of things in China. Obviously, very controlling sort of policies that they run over there, but they have not deemed Bitcoin illegal, because I think they know it's very good advertising when you make something illegal that you can actually enforce in a broad sense, right? Individually, yes, police can go over to your house and put a hammer, put an M16 to your head and say, give me the private keys to, a few different individuals. But like on a broad scale, it's very hard to enforce a ban on private ownership of Bitcoin, which is different than in gold, right? Because in 1933, FDR in the US banned private ownership of gold. Very easy to enforce that policy because gold's fucking heavy, and it's very easy to find somebody who's storing a lot of gold versus a private key that's held in your head.
Arthur Hayes offers a bold perspective on the forthcoming bull run post-halving. Delving into market cycles, Hayes reminds us of their inherent ebb and flow, emphasizing that no asset, including cryptocurrencies, remains static. While he acknowledges the possibility of significant drawdowns, even up to 85 to 90% in crypto, Hayes suggests that the current cycle may extend further, offering substantial upside potential for wealth accumulation. Furthermore, Hayes contemplates the potential repercussions of a global loss of faith in traditional finance, envisioning a scenario where such disillusionment propels cryptocurrencies into an explosive growth cycle. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.